And good afternoon, everybody. This is Michael Filighera. I am with LogicalSignals.com and TradersHelpingTraders.com. And this is the fourth update in the series on Bitcoin meets Elliott Wave. And today's date is Sunday, September 12th, 2021. I wanted to come in today and present my alternate view for the near-term picture for Bitcoin. And so I'm just going to start back sort of at the beginning and realize that what I've counted so far, and this is from the beginning when Bitcoin futures began to trade, that it started at the top of an intermediate first wave, produced an ABC structure down, which was wave 2, and then has been in the process of tracing out a intermediate third wave advance. So within that third wave advance, there will be 5 waves of minor degree, of which waves 1, 2, and 3 have been completed, and wave 4, which I had put as a completion point at the lows in June at 28,800, I had marked as 4. But today I want to present that near-term alternate view. And under the alternate view, that again, I would be placing a 5-wave structure down off of the all-time high so far at 65,520, marking it 5 waves down, which would produce only wave A of the minor 4th wave. Now, I'm going to bring this back down so that we can take a look at some of these internals and come down to the daily picture. So again, here's the 5 waves down, wave A. Now that would suggest that we're going to do a B wave counter trend move, and it's counter trend even to the larger counter trend move that's been now enforced from that 65,520 high. So because it's up and this counter trend move is down. So again, it's counter trend to what's already in place. So what we have now is an A, a B, and then 1, 2, 3, 4, 5 wave C. Now, as the alternate goes, that would be a completion point for wave B of the minor 4th wave correction. Now, if this is the case, what we're looking for is a C wave down. So C waves will always contain 5 waves, 1, 2, 3, 4, and 5. And so again, wave 2 corrects 1, wave 4 corrects 3, and 1, 3, and 5 are impulse. So in this case, because we were looking for it down, the impulse would be to down. It would be a downward move. So what I can do now is take this down to a 4-hour chart so we can begin to see what has taken place so far. And we had that on the, let's see, on what day was it again? Last Monday, last Tuesday? On the 7th of September, which was last Tuesday, we had quite a strong slide down pretty quick. Once we reopened after the Labor Day holiday, the Bitcoin just sank right off of that high that it made also in the Globex at 53,015, or actually it was 125, I believe, and then just absolutely slid nearly $10,000 in total to that low that morning at 43,705. Now, I had commented in our last update that there was a possibility because under the preferred count, I have marked this as the completion point for, we were basically working through a start of the minor 5th wave up, so that the entire correction, the wave 4 completed here. The minor wave 4, I had completed here. This was the A, this was the B, and then we had a 5-wave C, and that completed minor 4. That would be under the preferred count, and that still stands. But I need to present this alternate count because the market is now kind of hesitating in terms of continuing to move up, if according to what I had said in our last update, that this possibly could have completed all of that small wave 4, because remember, we're counting minute waves, and that would be minute 1, 2, and this would be minute 3. So we were looking for a minute 4th wave correction, which may have completed at last Tuesday's lows at 43,705. Now, what I then would be expecting after that is a fairly strong rally back up, and again to highs above that 53,120. And what we've gotten now is it continues to try to rally and it gets knocked down. It rallies and it gets knocked down. Now, it hasn't broken below the 43,705 low, which does keep it still within that small, or the actually, depending on how you look at it, the minor 4th wave correction. Now, if this is the case, then we maybe only have done wave 1, and this is a wave 2, a small wave 2, wave 1 of C, wave 2 of C correction, and now we're beginning to head lower again in a 3rd wave. Now, if that's the case, we should begin to accelerate lower. So that's going to be the key. So again, if I'm going to be counting this, and again, I got to go up a little bit high so you can see, putting the B wave there, and I could probably move these over, which I think I'll do as I'm talking. If we're going to if this is definitely going to be the B wave, then we would be looking for the C wave to get started, and wave 1 already being done, and that was this strong decline that we saw last Tuesday. Now, if that's the case, then what we're looking for is a wave 2 of C and wave 3 of C to get started. So let me finish this up and then we'll just move right along. So here we are in the hourly chart. Now let's see if I can open this up a little bit more, if my computer will agree with me. And please open this up. So it does that. Sometimes computers don't necessarily want to be your best friends. And we'll go here, we'll go to the 4 hour, to take it back to the 1 hour, see if I can't get that open this time. And if we see inside of here, I know what, I'm just going to go down to the 30 minute. That'll open it up a little bit. Then we can see 1, 2, we had a 3, a 4, and a 5. So it is a 5 wave structure down, which could be, I can interpret it as this is 1, this is the B and a C, so completing the 4, or it's a 5 to complete only wave A, or wave 1 of C. And if this is the 2, it may have ended here. So this would then be 1, 2, 3, 4, 5, not very clean. But if this is going to be wave 1 of 3, wave 2 of 3, and I have been checking on TradingView to see where Bitcoin is trading, and it's trading above 45,600 again. So it's back up in this range up here. And that being the case, we might see it kind of rally up a little bit more, completing a small wave 2. A continuation to the downside once we're reopened today and tomorrow, it could produce a more serious slide. And what I'm trying to balance this out against is to how Bitcoin necessarily functions and moves when a general sell-off begins to happen in the equity markets. As we saw on Friday, we had some fairly strong declines, and it kind of hit harder as we moved into the close on Friday with the equity markets. If that follows through tomorrow and we begin to see additional breakdown in those equity markets, how will Bitcoin respond? Well, if I had to take it about how Bitcoin responded on Friday, it was down 1,500 bucks. Now, if that continues, I don't think it'll take much to push it down below 43,705. And here's what would be behind that, in my view, on an Elliott basis. On an Elliott basis, if we had 1 of C, 2 of C, we're in a 3 of C, C waves, actually third waves, no matter if they fall within a C wave or if they're falling within a larger impulse wave, are quite normally and most often the strongest and the longest out of 1, 3, and 5. Waves 1, 3, and 5. 3 would be the longest and the strongest. And what it cannot be is the shortest wave out of the sequence. So if we're looking for a third wave, it should exceed the amount that wave 1 put in, unless wave 1 is the extended wave. So wave 3 does not have to equal that, but as this unfolds, if it comes in, let's say at $6,000 or $5,000, then we're not going to be looking for a very large fifth wave of C as this moves down. Now, so what does that portend on a little bit larger scale for Bitcoin? So again, I'm going to go back out to the daily chart. And what I have put on here is the Fibonacci extensions to show us the relationship if indeed this is a C wave down. The C waves are related in this type of an ABC structure. C waves are related to wave A in terms of length and Fibonacci relationships. So the most common relationship between a C wave and an A wave is that they're equal in length. Well, because of the change that we made, that could indicate that this C wave will come down to 16,070. That's where wave C would be equal in length to wave A. Is this gospel? Absolutely not. We're now reviewing an alternate view. So please don't misunderstand me that I'm suggesting that the market's now going to drop below 20,000. I am not suggesting that. I'm giving a potential and probabilities if this is the count, if this is the structure that it is putting in. So I'm not saying by any means, prepare, we're going to go down. But it would be nice to, if we start to break below the 50-day moving average, which is at 43,685, which held last Tuesday's decline, if it starts to break below there, we're now seeing on a daily basis market weakness. And my initial look would be that it's going to drop down to the 200, which happens to coincide with that wave C would be 38% of wave A, and that comes in at 38,967. So you can see how the Fibonacci lines up with the moving averages very cleanly. Now, if it breaks below the 200-day moving average, it's going to give more strength to this count being what is in force. So our second most common relationship between a C wave and an A wave is that wave C would be equal to 61.8% of the length of wave A, and that comes in at 30,223. Now, what is required basically, or do we look for within a C wave, again, as compared to the A wave? And it doesn't matter if the position is up or down. In this case, it's A down and C down. So we'd be looking for that C wave to break below the low of wave A, which is 28,800. Well, what does that? Well, the next level down after 618 is 70.5, and that would be 27,000. That is certainly below. And if the structure fits, in other words, I need to be able to count 5 waves down. Well, if I get a nasty 3 down to here, a 4 and a 5, we might be getting it to that level, but we certainly can reach that level. And still, if we can count 5, done deal. Well, I'd be looking for a rally. But again, we've got to be able to count, and we know that one of them out of 1, 3, and 5 will extend. If 1 was the extended wave, then 3 is just going to unfold in a 5-wave structure, and then wave 5 would unfold in a 5-wave structure. So what else do we have? We have additional support at 78.6% of wave A, comes in at 23,999 or 24,000 to just make it a nice round number. And then we have that last one, but it can stop anywhere in between. So once we start to put that additional low in below what we saw back in June for wave A, then we're looking for the structure. When we get 5 waves down, then we likely are reaching the completion point for that C wave, and I'd be looking for the next rally. Now, the next rally is going to be a minor 5th wave, and that minor 5th wave would still be expected to move up above the highs at 65,520. Remember, Elliott wave are building blocks, and we're on a building block to complete an intermediate 3rd wave. So again, I'm going to go back out to that weekly chart so that I can show this more cleanly. Intermediate wave 1, intermediate wave 2 finished here. Intermediate wave 3 is going to have 5 waves of minor degree. 1, 2, 3, 4 may still be in progress, and it could still drop down. We have a 4, and then we have a 5. And then we'll be able to, wherever this finishes, whether it's here or whether it still has another one to down, the alternate view, that's what I'm discussing today. The alternate view suggests then that if we get the move down to here, I then will put the Fibonacci extensions that would cover what the expected levels for a minor 5th wave should be. And there are relationships then between a 5th wave and a 3rd wave on a Fibonacci basis. So we'll be able to pick areas because we would be expecting the market to move above 65,520, which in the case of Bitcoin puts it in uncharted waters, so to speak. We've not been above this level, so we don't necessarily have chart points that we could call resistance other than the ones that are already existing. So outside of that, we then now have to trust our relationships between the waves and how the Fibonacci sequences fit into that. And they fit in quite cleanly, by the way. And what tells me that is my continued use of these instruments, like the Fibonacci extensions and how they relate between the waves, does come in pretty cleanly to actually what happens. So where does that leave us? In the alternate view, where we would be looking for the market to begin to break down and it should start to accelerate. So why am I presenting this today? Because I want everyone to be prepared and not in the state of shock should it happen. Now, how can you protect yourself? There are several ways, and Bitcoin options don't trade very well, and so they're not as liquid. So you might choose to just exit any positions and look to re-enter as things come down, or you can begin to day trade it, or perhaps you're going to have positions in Litecoin or Ethereum or many of the other coins that are available. There are ways, because Bitcoin may go down 5 to 7%, whereas Litecoin or Ethereum may go down 11, 12, or 13%, or vice versa. So there's always those relationships between the actual coins, which are just representative of many of the other blockchains that are available. So Bitcoin's going to do its own thing. How that relates to the other markets, I think each of us need to determine that by watching the percentages of how it affects one versus the other. And then being able to trade it is going to be more important. And so you might choose to, if you already long and you believe strongly that the market still has more to go, which I do personally, then you might want to be adding to your positions, but more to be prepared that there is now the potential that the market could turn and just drop lower under this alternate view. Now, let me just review very quickly what the preferred view still is. The preferred view is that minor wave 4 did complete here, and that we have one minute. Now these are minute levels, so it's a degree lower. So we have minute 1, 2, and this was minute 3 up at this high at 53,125, and then we've got a minute 4. Now, even I cannot claim that minute 4 is complete. That's why it's never been labeled as such. But if indeed it is, then I would expect what's happening now to begin to hold, unless this is just needs to put in a smaller little C wave down, and it comes down and just puts in a slight new low, then yes, I can still label it as a minute 4. But if it begins to slide much further, then it's not going to be a minute 4. And let me tell you why. Because the fourth wave cannot overlap wave 1. So this could not go any further than 41,950, if indeed, under the preferred view, that this is the end of minute 3 and we're in a minute fourth wave correction. It can't drop below that because then it's not a fourth wave correction anymore. The basic rule here is that wave 4 cannot overlap the price territory of wave 1. Excuse me. And if it comes down below here, then indeed it's within the price territory of wave 1 and it's not a wave 4. That's why I'm presenting the alternate view today, because we do have that possibility. So best that I do that. But if the market holds, maybe just comes and dips a little bit below that level, which is 43,705. And again, we can count 5 waves down to complete a small C wave. Then I will likely put a minute wave 4. But before I do that, what I need to see is I need to see that low put in place and the market to reverse and start heading higher, as if there was a race to get back in. So the rally should be intense coming off of this low, whether it's down here or whether it's going to be way up here. The end result should be the same. When we're ending the fourth, we're entering into a fifth wave. The trend is still up. Even if it comes down and takes out this low, the long-term trend is still up. And that's based on an intermediate level, intermediate degree level. So even on a minor level, we're just completing a minor fourth wave, whether that's here or whether that's going to be here. We're still completing a minor fourth wave. A lot of territory has been covered on the way down, no doubt. But that doesn't mean that it's all over for Bitcoin. And trust me, if this thing starts to drop, there's going to be lots of pundits out there telling you it's the end of Bitcoin. This is a technology and a new technology that will not die, in my opinion, will not die because of the market decline. It is just gaining traction, and it will continue to gain traction, and it will continue to expand, and there will continue to be more than just Bitcoin, Ethereum, and Litecoin. There are so many already out there. The efficiency of the systems is improving. The security of the blockchains is improving. So this is going to be a major factor in the future growth of economies around the world. That's my opinion. Now, I will trade on my own opinion, but I want to show everybody this is how I come about my belief in what's happening by using Elliott wave, which doesn't take fundamentals, which doesn't take other people's opinions. None of that comes in. The news actually doesn't even factor in. But what we do via a preferred and an alternate view is we're showing the possibilities, and therefore that may fit into the news. If we start to get another serious decline going, another $10,000 decline in Bitcoin, and it's dropping us down to 35,000, well, you know, people are going to start to think, people are going to start to get worried. Well, I'd rather that we had an Elliott view that covers that and tells us not to get worried, or tells us really what to be expecting. So if indeed it is a C wave down, I'm looking for 5 waves down. And I will update it every day if I have to, if it starts to unfold in that manner. So here is how I'm going to leave this for today. And continuing the preferred count, which I will switch back, I'm just moving it here so that we could see what the alternate view. In the preferred view, yes, we can allow for a slight new low below 43,705. I really wouldn't be looking for it to drop below 41,000. Actually, there's the no break zone, which is, come on, get up there, right there, 41,950. So basically, it can't even really drop below 42,000 by very much. So there you have it. From where it sits now, it's just about 45,600 as I came on to do this recording. So it really can't drop a whole lot more and hang on to our preferred view. So once we start to drop below 42,000 or below 41,950, the preferred view becomes the alternate view. So that's how that works. So I want to be prepared for both sides. I'm keeping the preferred in place right now, and we'll switch it if this count gets violated or negated. And that's what would negate it, a break below that level. So this is where I'm going to leave it for right now, by also adding, if it is the alternate view, we will get confirmation of that with a break below 41,950 and a continuation. And if it starts to break below 43,705, I would expect some serious acceleration to come in. In fact, if it's down another 2,000 bucks tomorrow or even overnight, I'm going to be looking for more acceleration to the downside and to fulfill eventually getting it below that level and eventually down into our support levels, which would be expected then to complete a C wave down and then still label that minor wave 4. So all of this would be a correction, all of it, if the market continues to come down. It's not going to change that larger count. So it just delays the inevitable in my mind. Coming back out to the daily, this is the 3. If this is the 4, we'd be looking for a serious rally up, and I'd be looking for it to kick in pretty quickly. I don't think we're going to mess around. Like right now, it just is kind of hugging and holding in a tight little range there. And it's done that for the balance of last week. So that's why we want to be ready for tomorrow. Again, if the equity markets continue to decline, they also can stop and pick up their rallies again. So a lot is hinging on what the markets are going to tell us. That's the only place where we're going to get the facts, is by allowing the market to tell us what its intent is. We can try to predict, we can try, but I prefer to lay out both sides of that coin. So in other words, here's the bullish, here's the bearish. So the bullish view is that it stops and it just starts to pick up the rally again, gets itself above 53,000 on its way to break above 65,520. Then we'll reinstate our Fibonacci extensions for the upside. And if you remember, we had them going all the way up to 77,000, up to 90,000. And that would just be to complete this first intermediate third wave. Then we get another fourth wave correction, but then we have another fifth wave advance. And that's the one that I think, if this is going to be the preferred count, that would be the one that takes us above 100,000. And Bitcoin can reach 100 to 150,000. And I think it can do that all within an intermediate fifth wave. So in a complete cycle on the intermediate level would be 5 waves of intermediate degree up. And then that allows us to almost produce our next series if we want to take this up to a cycle level. I don't know, based on the fact that this might still be considered a commodity, but once I can get an intermediate degree 5-wave structure in place, I'm looking for an intermediate degree ABC structure as a corrective phase. And then I'll be able to go, okay, this is cycle wave 1 and 2 on a much higher level. And on that type of a letter, which is why I've been talking since day one, this is such an opportunity for me as an analyst to come into a product that's basically just getting started. We may have started trading the futures in 2018, but it's taken 3 years to build a picture for this thing. And it right now is not a negative picture. My alternate view on a large scale might be, but then again, this would have to turn and start to accelerate lower to change my bigger picture view that we are in a intermediate degree advance. And so if we're not, then yes, I can change this to an A, a B, and this is a C wave finishing up to here, you know, A, B, and this is maybe this is wave A, this is A, B, C, wave B, and we're going to get a much larger C wave down. These are all possibilities. But again, we're going to let the market. Right now, the energy has not turned that negative overall on cryptocurrencies, on the blockchain systems, on any of that. That continues to build and that continues to produce positive results. So I don't see a major collapse as if this was all an exercise in futility, that all the blockchains fail and everything goes back out and whatever happens will happen. I don't necessarily see that, but we have to be able to consider it. So right now, my consideration would remain that we're still within a minor fourth wave correction. That's as far as I'll take it for right now. I don't think the big picture is wrong. There's been too much energy and there's been too much enthusiasm for the market. Could that be killed? Yes, but I don't see it on a larger scale, particularly when countries are now beginning to accept it as legal tender. That changes a lot of pictures. And if we start to see that roll out, we start to see the availability to transfer assets, gold, silver, other things that need to be shifted around by just shifting them into a coin and moving it across the globe. There's so many advantages to what is being developed for global economies and for the global movement of assets. So I still think there's a very bright future for the whole blockchain methodology, the whole asset transfer that's being developed. So I hope this has been helpful and giving a little bit more explanation on Elliott. And if you have any questions, please feel free to ask. This will be posted within my Teachable account. Please comment. It'll also be posted on YouTube. Leave me a comment and I'll be able to help you out. Thank you very much for your time today. And I hope that it's been informational and it's been useful.